Moody's investor service raised India's sovereign bond rating, referring to proceeded with advance in the country's financial and institutional changes. The firm overhauled India's appraising to Baa2 from Baa3 and said changes being pushed through by Prime Minister Narendra Modi's legislature will help balance out obligation. That is a move from Moody's most reduced venture review positioning to the second least. This is a positive shock to the business sectors, particularly regarding timing, said Vivek Rajpal, a rates strategist at Nomura Holdings Inc in Singapore. One dread that was creating in the market was obligation stream positioning. Non-deliverable advances on the rupee ascended, with one-month contracts climbing 0.6%. Spreads on dollar bonds from Indian organizations fixed by around 5 premise focuses, as per brokers who are not approved to talk freely and requested that not be identified.m. Prime Minister Modi has pushed through clearing changes, with blended outcomes. A choice in November 2016 to expel from course just about 90% of the country's money has weighed on development. Different measures for example, endeavors to cut formality, make it less demanding to work together, and the burden of another utilization assess have met with more success. The government won acclaim from the valuations firms for a $32 billion program to recapitalize banks that financial specialists say will restore loaning and feed request on the ground. While India's high obligation load remains a requirement on the nation's credit profile, Moody's trusts that the changes set up have diminished the danger of a sharp increment underwater, even in potential drawback situations, Moody's said in the discharge. The redesign comes after Indian sovereign bonds were sold off this week as buyer costs climbed more than anticipated. The benchmark 10-year yield progressed past 7% on Tuesday out of the blue since September 2016.